Hello, everyone. Welcome to Smartkarma's Webinar Wednesday. I'm Michael Tegos. Today, I have the pleasure of welcoming Steven Holden. Steven will share with us a general analysis of fund positioning across countries and sectors and stocks, highlighting under-owned and over-owned areas of the market using his unique data-driven approach. A few words about Steven. He is the CEO and founder of Copley Fund Research, an independent provider of research on equity fund positioning and performance. Set up in 2014, Copley focuses on global, emerging market, US, Asia, ex-Japan, and China active equity funds, covering over $4 trillion US dollars in assets across 1,300 active managers. A few seconds more to take care of some standard housekeeping. You are always welcome to send in questions for Steven using the Q&A button on your screen. You should be able to find that at the bottom. And please do not reshare this webinar without express permission. A recording, as always, will be available on the registration page after the session. With that out of the way, Steven, over to you.
Thank you, Michael. Much appreciated. And thanks everyone for dialing in. I think we'll kick off just with a brief introduction of what Copley is, just following on Michael's great overview. I guess for this analysis, we're looking at global emerging market funds. We do look at other fund groups, but GEM tends to be where most of our interest lies. And this page just looks at our fund universe. So in GEM, we have 241 active strategies that we analyze. And the total AUM is around about 460 billion. So you can see the largest of our funds, American funds, Invesco, Fidelity, JP Morgan, all the funds you're kind of familiar with, right the way down to all sorts of different ones, Essor, Lazard, Oaktree, etc. So we have a fairly comprehensive data set. The idea is we're trying to get as many strategies, different strategies as we can to analyze. And you may be asking, why bother? Why look at fund holdings? And we look at it in two distinct ways. The first, probably obviously, is really that the stocks that a fund holds, or indeed what they don't hold, are really a reflection of a manager's conviction. And we see managers as the top of the tree when it comes to information sources to draw from. They have the sell side and obviously the great guys at Smartkarma to look at. So a portfolio that they set up is a distillation of those ideas and convictions. So we think that's a valuable source of alpha to analyze. And then the second is the combined activities of big institutional investors can move markets. And it's as simple as that. Prices move due to the actions of buying and selling, and are also influenced by the size of the initial position. Obviously, if hundreds of funds are doing the same thing, it will have a bigger impact on price if just one is doing the same thing. And so we really aim to provide clarity on those convictions and the positioning levels of active managers in emerging markets. And the idea for us is that we complement a fundamental or quantitative approach to help you make better allocation decisions. So with that, let's click on to our sector board. And so we're looking at the basic setup of sectors within emerging markets on this board. So the top 5 bar charts highlight how we look at the world. We look on the top left where my pointer is here, the average fund weight on a sector basis. We can see tech is by far the largest weight. And this is the average, equally weighted average of the funds in our analysis. So the average weight in each sector from those 241 funds, we can see tech, just under 23%, financials, discretionary, consumer communication services. And the line charts over here look at the long-term trend. So we can see the average fund weight in tech has gone from 10% back in 2008, and it's risen to 23% with a big surge up during the kind of COVID pandemic in early 2020 here. And we're pretty much at peak levels in tech. We can also look at, and something we look quite importantly at, is the relative position of sectors within portfolios. So what the big overweights and the big underweights. And you can see tech is the largest overweight by a reasonable margin now, nearly 2% overweight on average, followed by staples and industrials. The big underweights, energy and materials. And again, you can see that time series. Tech was an underweight for a long time, and it switched to an overweight in kind of mid-2019. And again, we're towards peak levels in tech in terms of the relative position as well. A third metric we look at is the percentage of funds that are invested in each sector. Every fund has a tech exposure, a financial exposure, and a discretionary exposure, not so much the other sectors. If we click on utilities here, for example, our time series changes to the utilities sector. Just over 2/3 of funds own utility stocks now. So it's not an essential holding in an EM fund by far. You can see the weights have drifted from well over 4% a decade ago to just 1.5% now. So it kind of highlights that, not every sector is a necessity. And indeed, many funds aren't bothering with a number of sectors in this analysis. So the last two, we look at the percentage of funds that are overweight. So just over 2/3 of funds are overweight tech, just under 60% are over industrials. And you can see only 19.5% of funds are overweight energy, hugely under-owned sector. We've written about this before. You can see weights around about the 3%. It's been underweight for a long time. Why does that matter? Obviously, if it performs, then active managers stand to lose out. Only 78% of funds own energy at all. So it's kind of a massively under-owned area of the market. And it only really matters, obviously, if energy starts to outperform, it will start to get painful. And on the right here, we just have the total AUM of each sector. So tech is now, of the $465 billion in our analysis, has just peaked at over the $100 billion mark. So that's the kind of the broad overview of sectors. We tend to look at the world in terms of three metrics. So we look at the latest snapshot positioning using these metrics. We look at the long-term analysis using a kind of time series analysis, and we also look at short-term analysis as well. So we're looking at where is positioning versus the long-term picture, and is the short-term picture confirming or contradicting that picture? And we can kind of look at that by looking at the change in sector holdings over any time period, but we'll choose 6 months here. So from the end of September to the end of March, how have these sector weightings and allocations changed over the last 6 months? What's been happening on a sector basis? And we can see that tech weights, if you remember those time series charts, have increased the most. So they've moved up from here. This dark gray bar from here to here has increased by 2.5%. We can see financials and materials and industrials also increasing. We can see funds moving more overweight financials and industrials. We can see more funds buying into industrials, more funds going overweight industrials and financials, and cash flows in industrials, materials. And I've probably said industrials about 8 times there. It's an interesting sector. If we click on it, we can see over the past 6 months, allocations have started to rise, and you can see that across every metric. Average weights have gone up. We've moved from an underweight to an overweight position. More funds have been buying industrials, are actually opening positions in, moving overweight, cash flow positive, AUM going up. So it's a real kind of fascinating sector, which we'll go into a little bit more shortly. And I think it's also worth noting financials has been fairly kind of a little turnaround story recently, got massively hit during COVID. We wrote about that. It was the real sector to go, which people just exited en masse due to the fear of defaults, etc. That started to bottom out. We saw the bottoming out in kind of September of last year, and allocations have started to rise. So funds cutting that underweight a little bit and reinvesting into the sector. So I think industrials and financials look fairly interesting here. I think what we want to do is kind of allow ourselves to understand where this all fits together. So how can we get a good visualization of where sectors stand in terms of where they're positioned now? What are the changes? How does that fit versus history? And we look at something called a sentiment grid, which is what we've constructed. If I can just ask you to look at this chart on the top left here, which shows each sector on an X and a Y axis. The X axis here shows a level of fund activity. We call it momentum score between 0 and 100. So that basically looks at how positive these metrics are on aggregate versus each other. So we can see industrials, financials on the right-hand side of this grid, and we can see communication services and healthcare on the left-hand side. Tech, for example, if you remember, we're looking at technology, is very much at the top end of its positioning range. Therefore, we can see tech at 98% percentile in its positioning score. So it allows us to understand where these sectors are positioned and what might look interesting. So in particular, things like industrials, which are nowhere near their highest level of positioning, but are seeing buying, looks interesting to us. And we can see some of that individual fund activity there. The largest increases in fund weight in industrials, 7% from PGIM, Goldman Sachs, WCM, increasing their weights in industrials over the last 6 months. So on that basis, I thought it would be worth digging into industrials a touch more. Again, we have our sentiment grid here, and we're set up for industrials on a country level. So we're looking here, how does each country in industrials sit versus history on a positioning level, and how does the activity look? And it's a reasonably interesting picture in so much as many country industrials exposures are at the lowest ever levels, or are seeing some reasonable size buying. And so we can see that breakdown of country allocations within the industrial sector. China is the largest weight. It's the most widely held exposure. It's the biggest overweight, and more funds are overweight China than any other country. So we really think it's the kind of star of the show. And if we click on it, we can see some of these time series charts. This is just for China industrials. We can see how much China industrials has soared over the past year or two. Allocations are rising aggressively. We've moved from underweight to overweight, more funds getting involved, buying into the industrial sector, cash flow positive. So we can look at in more granular detail now what's causing that, what's behind these moves, which are the popular stocks within the Chinese industrial sector. And this chart here breaks down those holdings on an individual stock level, and again shows some of these metrics that we're used to seeing on the sector level, but for a stock level. So we can see Weichai Power is held by just under 20% of the funds in our analysis, an average weight of 13 basis points. It's a slight overweight. And over the past 6 months, the funds invested percentage has actually risen. And if we click on Weichai Power, we can see that come to life in this visualization, where we can see the funds invested percentage increasing. So more funds buying. We can see who's been buying it. So we can see TT of open positions, Magna, Robeco, Dreyfus, BNY Mellon. So a bunch of different funds have been opening positions in Weichai Power over the past 6 months, which contributes to that increase in Chinese industrial exposure. And in fact, we can sort by the stock that's seen the largest increase in ownership over the past 6 months, and that is Costco Shipping. You can see a big spike in ownership. Victory, Robeco, Goldman's, MFS, all buying into the stock over the last 6 months. And for balance, we can obviously see the stocks in the sector that people aren't so fond of. CRCC Corporation is kind of seeing the opposite, and big closures from Lazard's, Robeco, Fidelity, et cetera, et cetera. So these kind of dashboards allow us to understand a bit more of the detail behind some of these macro moves and the stocks that people like, the high conviction names. And so it allows us to go into this this kind of level of detail. I also wanted to focus on financials. I'm conscious that I haven't got time to look at everything I want to look at. The financial sector looks a little like this. We can see China and India, the dominant forces in terms of allocations and the most widely held countries in the financial sector. But whereas China is an underweight, India is the largest overweight in the financial sector. If we click on it here, we can see those charts adjust. And when we had a big sell-off during COVID, we also had a big reversal, and we can see that kind of troughing around mid last year, and we can see the funds invested percentages rally again. And we're really seeing kind of confidence return to the sector. I think we wrote about it on Smartkarma. There were clear signs that people wanted to get back into Indian financials, and that's what they were doing. We can actually look at some of that stock information in the Indian financial sector. If we move down, we can see what are the most widely held stocks. Excuse me. And HDFC Bank is top of the tree. And I think if we look at HDFC Bank and some of the other financial names, it's clear that confidence had returned. And I think with the kind of awful second wave that's hitting India, this may be a cause for concern for some managers, because people are very well positioned. It's owned by 47%, 48% of the funds in my analysis. People have been buying into the stock more recently. It's also one of the biggest overweights in EM at the moment. So I think it's just worth highlighting that Indian financials confidence had got back to its earlier levels. We can look at stocks like State Bank of India, which has seen ownership levels rally from the lows as well. People really buying back in. Jupiter, TT, Fiera Capital, Neuberger Berman. So these kind of names had really curried favor with EM managers over the course of the end of last year and towards this year. So I thought that was very much worth highlighting. And I think another one I'll just quickly touch on is Thailand financials. I know there's the MSCI rebalance coming. What we're seeing in Thailand financials is we're at this bottom right-hand side of the grid here, which means very, very low positioning, but positive fund activity. And we can see that in the charts. We can see massive, massive sell-off, people cutting Thailand financials exposure completely. But since October, have been started buying back in again. And the key name for that we can see is Kazakh Bank. public, which has seen investment levels rise. Swedbank, Dunham, TCW buying into Kazakh Bank, which may help absorb some of the selling, I think, that Brian wrote about in his rebalance piece today. So I thought that was an interesting metric. So quickly moving on to countries to try and give you an idea of the country setup at the moment. The biggest weight, as you'd expect, is China, 33% of portfolios now, but we definitely saw peak China, certainly for this period, occur in October when weights hit 38%. Since then, they've come down a little bit. It's not quite the force it once was, but it's still a big underweight in EM portfolios. It's the largest underweight by far, 4.73% underweight. The key overweights are Russia, which we wrote about, especially in context of the Ukraine situation, and India again, which you find interesting. Again, it's worth noting that not every country is invested by every fund, quite far from it. The Philippines, for example, has seen ownership levels drop quite aggressively. Less than half of the funds in our analysis have any exposure to the Philippines now. Similar to Malaysia, 40% of funds, it's just a downward trajectory in some of these countries. So again, as an EM allocator, you don't need to be in every country to outperform your peers. Plenty of people here are avoiding these sectors completely. So I wanted to just focus on, because I'm conscious for time here, a couple of countries I'm finding interesting at the moment. I think the main one really is Saudi. If we just pull up the figures for Saudi here, it's obviously a reasonably new entrant. We can see this red chart here, Saudi Arabia exposure versus the index, bumbling along, no one held anything, and then bam, it enters the index in two tranches, and all of a sudden EM funds are underweight by 2.5%, which is a reasonable size underweight. Last year that worked brilliantly. It was definitely a big contributor to outperformance for EM funds last year. This quarter, not so much. Saudi's really outperformed, and in the analysis that we do, Saudi has been the key detractor of returns over Q1. So it's definitely on the radar. I know it's on the radar of funds. People are looking to allocate into Saudi, and we're seeing that happening already. So we saw the initial, if we look at this green chart here, the funds invested percentage, initial surge of buying on the index rebalance, selling off through last year, but we're starting to see buying coming back again. So we're actually at peak ownership now in Saudi, which I think is interesting. I think that's going to grow. If we look at the sector breakdown, really it's about financials and materials. If we click on Saudi Arabia financials there, we can see a similar picture. Again, we're kind of at peak ownership levels. If we go down, we can see the most widely held stock is Al Rajhi Bank. We can see people kind of buying into that. The biggest recipient of inflows or increased ownership is National Commercial Bank. Again, you can just see these spikes in ownership here. People like Goldman Sachs, 91, BlackRock buying into these kind of names now. So it feels like there's been a kind of a sea change a little bit. If we just look quickly at materials, and again, you'll notice materials and financials are right to the top level of this grid, indicating strong fund activity and high levels of positioning, kind of hand in hand. So it's, we're definitely breaking new ground on this. And in terms of the materials sector, Saudi Cayenne Petrochemical has seen some buying, although it is, fairly small for now. These are the positions that have been opened, 20 bips, 14 bips, nothing massive, but I think it's worthy of your attention if your mind's not already focused on Saudi just yet. So, I wanted to end the presentation with some stock information. This dashboard shows the largest overweights in EM at the moment. So stocks that are net overweight versus the index weight, stocks that are fairly well held, and it's headed by HDFC Bank, a stock we mentioned earlier. It's the largest overweight in EM at the moment. It's not in the index, so it's by default an overweight. Then we go down to AIA Group, Mercado Libre, Ping An Insurance, and Sea Limited. And you can see on this sentiment grid again, most of these stocks are towards this top right-hand side. So they're very well owned, very well supported, seeing good inflows, with the exception of Yandex and Media Group, which you kind of stand out here. If we click on Yandex, we can see a little bit of that, how ownership has peaked in Yandex. It's still an overweight, but it's less of a kind of a bullish picture, if you like. Same with Media Group. Big ownership rise, but we kind of peaked a little bit. Average weights are drifting off a little bit like that, but they still represent an overweight in EM portfolios on average. So they're still important stocks for gem managers at the present time. I thought we'd click to underweights, the biggest underweight. So this is the average weights minus the index weight. One of the largest within the GEM universe at the moment. Alibaba and Tencent head the list by a considerable margin, but that's not to say they're disliked. I think there's a difference between an underweight stock that's very well held and an underweight stock that is held by hardly anybody, and we'll come to that one next. Alibaba and Tencent are both held by over 82% of the funds, or around about 82% of the funds in our analysis. So they're extremely well liked. If we look at Alibaba, we're looking at 8, 7, 6% positions in portfolios here. It's massively high conviction name, and it's the same as Tencent. Obviously, if we switch back to Alibaba, weights have come off in a fairly significant fashion since the Ant IPO cancellation, and we've written about that on Smartkarma as well. It's a big gap down from a 6.6% average weight to a 3.84% average weight. Funds are still underweight by 1.5%. It's a big underweight to carry in a name as volatile as Alibaba. So we think this could be a good opportunity for funds to close that underweight and think about raising allocations. I think the most interesting thing for me doing this work over the last 5 or 6 years is how Xiaomi, Neo, and Pinduoduo have sprung onto the scene from absolutely nowhere and now represent a reasonably large risk to EM portfolio managers everywhere. If we click on Xiaomi, this was a nothing stock. And all of a sudden it's a 54 bip underweight on average. And when these things are doubling, trebling, quadrupling, that's extremely painful. And last year, these stocks were painful to the majority of EM managers. This quarter, not so much as they underperformed, but the stocks that people have to be wary of. And we're seeing ownership growth in these. So Pinduoduo, it's a fairly straight line up. More people are buying into them, but these are not high conviction holdings, particularly 3, 2, 1% holdings. I think people mitigating the index risk there. So these 3 stocks are very interesting underweights and very lightly held stocks at the moment among emerging market investors. And if we go down the list a little bit, we've got the classic kind of Vale, Gazprom, China Construction Bank, some of the bigger names, bigger index names that have never quite captured the interest of EM investors to go overweight. So if we just extend that a little bit further, and look for unloved stocks, we look for stocks that are held by less than 5% of the funds in our analysis, and a net underweight on average. We can see things like National Bank of Kuwait here in this bottom left quadrant, held by almost nobody, seeing selling. 3 funds own it in extremely small size. Yet it's a reasonable size in the index, 22 basis points or so in the index underweight. Just not a like stock, not a well-liked stock at all. And we do back testing on unloved stocks, and they are on average big underperformers. But I guess we just highlight once again, perhaps some of the Saudi names, Saudi basic industries as being unloved and underowned, but it's on the right trajectory. At some point that will no longer be unloved and underowned. We can see that in Samba Financial Group as well. So, some of these stocks are not well liked. Some are moving from not well liked to better liked, shall we say. And the final board I want to show you was turnaround stocks, and there's some interesting candidates here. These are stocks really that appear in this bottom right-hand corner. I know I'm banging on about this sentiment grid, but it does make things very easy to visualize. These are basically stocks that are at the bottom half or the bottom end of their positioning range, but are seeing really strong manager activity. So people buying back into these names. And the idea behind stocks like this is that they're well understood, well-known names in EM portfolios. You look at something like MTN, we click on that. It was once owned by 60% of the funds in our analysis. So a really well understood stock that's just fallen favor over the last decade, but we're seeing that bottom out. So we're seeing funds buying back in. We can see Robeco buying in, Capital, USAA, MFS, Guidestone, Robeco, these guys buying into MFS from a really low ownership base. And the same thing from POSCO. We wrote about POSCO a few months ago, because we could see this happening, see a really well understood stock bottoming out and starting to move forward. And if these guys, Peartree, Pace, Valek, are buying into these stocks, obviously something on the fundamental side is changing and making that investment case more attractive. And AU Optronics is another interesting one, screaming at the moment. And, we're seeing some ownership levels increase. Actually, finally, I think I might squeeze in another minute. Value's been high focus for me this year. Value funds are outperforming everything for the first time in a long time. So some of the analysis that we're doing is focusing on the value funds in our analysis. And these are the value funds here. You can see Overstone, Artemis, State Street, who are at the value end of that spectrum. these 10 stocks are the most favored value names. So the ones that are most widely held, that are held overweight on average. And they are Lukoil, SK Tel, SK Hynix, Hana Financial, Baidu, Sparebank, for example. So these are the names that are held in high regard and held by a good number of the value funds in our analysis. So if that's something you're looking at, we have quite a bit of data on that. But I think I'll end it there and open it up to any questions.
Thank you very much for that, Stephen. This is all very interesting and very well presented. And in fact, one of our attendees agrees with that and comments that this is quite an impressive presentation. So well done. And they are asking which data sources you use.
So the data sources, all this is publicly available information that we get. And it's from a variety of data sources. The data vendors that I'm sure you're familiar with. And this, I guess, if we can call it skill, is understanding which funds to look at and getting that data into one place and then analyzing it and making sure that data is accurate. There's plenty of people who publish data of this kind, but a lot of it's still done manually. And so it requires a reasonable degree of cleansing before it can go anywhere. We spend a lot of time doing that. But yes, we certainly don't get data from the funds direct. We have tried that before, and it gets difficult because people don't want to disclose their holdings as of yesterday. So there's a natural lag to our data of a couple of months, but we snap everything as of the end of the most recent month. And as this is long only data, long only funds that we're looking at, we're happy with that lag. This is not hedge funds we're looking at. These, the average holding period that we for the funds in our analysis is well over 2 years. So it's public information that we get and we analyze in our research.
Thank you for that. If anyone else has any questions, do feel free to send them in using the Q&A button. Stephen, I was wondering about your comment on the energy sector. I saw it at the start of your presentation that it's not one of the best loved, I guess, sectors. And I'm wondering if current trends in the environment and in the investment into renewable sources and alternative sources of energy play a part in the sector's overweight at all?
It's an underweight, the energy sector. And I'm sure if we look here, I've pulled up the energy sector.
Sorry, underweight, yeah.
Yeah, if you can still see the screen, energy has just fallen out of favor. And I'm guessing some of it is structural, some of it is, a switch to kind of, people just by default not investing in fossil fuels and things like that. But then again, we look at ESG funds and they hold energy in only a slightly smaller degree to non-ESG funds. So I don't think we can read too much into that. It's just a non-interesting sector at a time when things like tech and consumer is the kind of buzzword in EM, and that's getting the attention. So it's definitely underallocated, and we can see here in this top right chart, every country within the energy sector is underweight. I mean, there's very little love there for anything, and this whole thing just is a sea of red indicating underweight. So potentially renewables, etc. But and I'm sure there is a structural side to it. I don't think we're going to get back to 15% anytime soon, but it does feel to me like this last leg down was due to COVID rather than any kind of structural element, which potentially could reverse.
Understood. An attendee asks, what does your data show about the commodities sector?
So I can pull up materials here. Unfortunately, I don't have the dashboard that can split out commodities. Materials is obviously going to include the full gambit of materials exposure. But again, we're seeing that, as we mentioned, kind of trough from the lows. This is the materials dashboard. And again, the country breakdown here is towards this bottom right-hand side of the grid, which indicates reasonably low positioning levels in materials, but with generally positive activity. And we can see South African materials, for example. We can click on that and we can see again, massively lower than it has been, but are broadly trending upside since the middle of last year. And if we look at the stocks within the materials sector, we can see Sibanye seeing some reasonable buying activity, Fidelity, TT, Optimix buying that, African Rainbow Minerals, for example. So there's definitely, on balance, more positives to take from the materials sector than negative. It's definitely under-owned. But again, there is a reasonable structural element to that as well. But we can see that kind of turning around, if you like, from over the last 6 months.
Got it. Another question from attendees is, are there any insights on contrarian indicators or momentum indicators which you may have spotted for more legs? If I'm reading your question right.
More legs. Yeah, I mean, we look at, well, I don't have the dashboard up now. So we look at this dashboard, these dashboards here on a stock level. Okay, so we look at every stock and where it stands, and where we also pair it with prices. But unfortunately, it's not really part of this presentation. So we can obviously see, using our data, when things are looking over-owned, but when sentiment is starting to turn, okay, and when prices might be in the top 10th percentile of the past 10 years. So we can pair price data with momentum data and positioning data to come up with screens to show stocks that we think have a chance of outperforming. And if we start at the top level, so we start with a sector, we move down to country, we can then whittle down that stock list to kind of interesting candidates. But I don't have anything on this presentation that I can show you without opening up all sorts of other stuff that might be a bit clunky.
Well, clunky would not be out of the norm for this webinar, given the interruption before, but no worries. So we have a question from fellow Insight Provider Victor Galliano, who himself has been a part of these webinars in the past. Hello, Victor. He says, great presentation. Within EM financials, India stands out as the largest overweight, as you said. How do Brazilian, Turkish, and South African banks look?
Right, we can look at that as we speak on the fly, Victor. Very nice to hear from you, Victor. Let me just try and get that question screen out of the way. So if we start with South Africa, fairly beaten up. We can see it on the board here towards the bottom end. If we click on this, we can see the South African picture as being well shot after COVID. So 1.6% allocation, troughing out at 60 basis points, but raising slightly higher. It doesn't look that positive. If we can look at the funds invested, it's pretty much at an all-time low. So again, this could be a trough, but there's no signs of it massively trending upwards. The reason it's on this left side of the grid here is because activity isn't massively positive. It's net negative. We can see the net cash outflows here in South African financials. We can see the, if I just sort this, the most widely held is First Rand. We can see that one there again at the bottom of its ownership range. We're seeing some price action moving it up, but really no one's really buying into it. On a few advisors here, but people are. We're seeing some buying actually. That's interesting. Let's have a look what the names have been selling off. So the names that we've seen the most selling in has been Momentum Metropolitan. So that doesn't look right to me. Excuse me 1 second. Something just added itself there. My apologies. So South Africa looking fairly negative. Let's pull up Turkey. I don't think that's going to be any better, Victor. We've just got to find it on here. If I click this, there we go. So Turkish financials, again, it's just a horrible picture. So Turkish financials were owned by 77% of funds back in 2010 and now owned by just over a fifth of the funds in our analysis. So it's a really bleak picture. Someone who used to trade Turkish options and Guarantee, İşbank, Akbank were the big names. They're hardly held by anybody. I mean, Guarantee Bank held by 7.5% of the funds in our analysis, used to be held by 57%. It's just a dire picture. They're not well liked. They're even small in the index. They're not even big under our overweights. Turkey itself has almost drifted to nothing. So there's definitely some funds nibbling. So you can see TT Schroders buying Guarantee Bank, but in very small size. Other funds closing Guarantee Bank. I think we just need to filter that. Sorry. Other funds closing Guarantee Bank. So there's certainly no ray of light in Turkey whatsoever, other than the fact that it's very lightly owned. But there's really nothing else you can say about that. Brazil, I think, was the other one, wasn't it, Victor? And Brazil is down here, which is more promising. So if we click, I wish I could get full screen here, but I can't. How do I move that black thing? I can't move this thing at the top. There we go. Hang on. That's it. Right. That's it. Okay. So Brazilian financials, again, massive drop. So allocations are just so much lower than they were this time last year. So again, we're kind of half where we were, but it's a much more widely held sector than Turkey or South Africa by quite a long way. So you've got B3, Brazil has been the most widely held stock on an upward trajectory. It's a reasonably well liked stock, marginal overweight. In terms of the funds that's seen the most buying, Banco Bradesco preferred shares have seen a tick up from the low. Again, this low occurring in financials around about last year, September time last year, and we're seeing people buying it, Ashmore, Neuberger Berman, Optimix, Goldman Sachs, etc. So that and Itaú Unibanco have been the recipient of this flows from a downward base, right? So it's kind of this falling knife situation where it's halted. I mean, these are the lowest ownership levels ever in some of these Brazilian banks. So it kind of looks positive, but it's not. It's more of a stopping a downward trend than it is an acceleration of an upward trend, if that makes sense, Victor.
Thank you for that. Before we close, I guess there's a couple of craft-related questions. So a question is, how do you access over/under ownership across different markets and sectors and stocks? As well as if you can share any examples of data sources that you use.
I can share. I'll probably rather disclose data sources privately, if that's okay, rather than blasting out on the call.
Absolutely.
The over/under ownership, it's really because we have a closed fund universe. It means that, and this is why our analysis works. If you imagine if I analyzed every share of every company, ultimately every share of every company is owned by somebody. So you would get very little from that analysis. What we do is we take out a portion of that investor base. So we take out 241 GEM funds from every single share register of every single stock that they own. So we're left with effectively a stock universe of a few thousand stocks in which global emerging market investors can invest. So that allows us to understand what people do own, and it allows us to understand what people don't own. So that's how we can get this view of under and over ownership in terms of where is it versus its past, where is it versus the index. And so we can understand, when things look at their maximum levels or they're not being held at all. So I think that answers your question. I'm not sure. It's going to disappear from my screen, but I think that answers it. In terms of it's the way we analyze data allows us to understand not just what people are owning. And I think if you look at like a Bloomberg HDS screen, you can only see what people are owning, whereas our analysis, we hold the data of what they used to own. So for any stock, I can look at what the maximum holding was for any fund, for example, so I can understand what the potential buying might be from understanding previous ownership. And that's what we kind of do. That's what we measure, that kind of potential buying that might occur given what we know about past ownership on a stock or a country or a sector or an industry or anything like that.
Well, thank you for that peek behind the curtain, so to speak. And thank you very much for being so generous with your time today, Steven. Thank you, everyone, for your questions and for being with us today. And thank you for powering through our little glitch there. Do not forget that you can find more of Steven's work and analysis on Smartkarma. So please look for that on the platform. And you can engage Steven for bespoke research requests. Just let your Smartkarma account manager know about that, and they will facilitate the process. You can write to us at research@smartkarma.com as well, and we can help you get connected to Steven. Once again, thank you very much, Steven, and thank you very much, everyone.
Thank you.